By the way, we got Pepsi earnings crossing the tape.
Are they stalling
adjusted
a little bit?
earnings, $1.54 versus consensus of $1.50. Remember, Pepsi has been an outperformer year to date, up 20%, double the gains of its rival Coca-Cola. Of course, 50% of Pepsi's revenue is the Frito-Lay snack portfolio, so a more diversified stream of revenues here. Immediately, we are seeing just a tiny fraction higher in shares of Pepsi, but at least on the EPS side, it looks like a beat.
Okay, Garrett, you are here. You were looking for 151,
yeah.
I think. Joining us on the Squawk Newsline, Garrett Nelson, senior analyst at CFRA. You've had 10, 12 seconds to look at this. What is your feeling about these numbers compared to your expectations?
Sure. So thanks for having me. It looks like about 3 cents ahead of consensus. Pretty solid quarter. I think Pepsi has a pretty strong track record of beating earnings. They've beat now 8 of the last 9 quarters. So maybe a little disappointment that they didn't do better than $1.54 because they've been so conservative with their guidance. Also, it looks like they've maintained their 2019 EPS guidance of $5.50. That's about a 3% drop in earnings from last year. The stock has done very well year to date. The PepsiCo's up about 20%, which is more than double what Coke shares are up. And it's really a 2020, 2021, 2022 story at this point. Obviously, investors aren't buying the stock for the 3% drop in earnings this year, but looking out 2 or 3 years, we think this is a company that can earn north of $7 a share. And there's really been a lot of fun inflows into names with higher yield. Pepsi's yielding close to 3%, and so we like the stock here. But the quarter, a little bit better than expected. It looks like the top line was about in line with expectations.
I'm being told $26 million ahead of the. So they're parsing it all the way down to $26 million, but it is above. Revenue came in $26 million ahead of the consensus estimate, but organic revenue growth was 4.5%, that's pretty good, I guess, isn't it? If you factor out everything, Garrett.
It is pretty good. Last quarter they did 5% organic revenue growth, so it's down a little bit from the growth rate of last quarter. Frito-Lay has been a very solid contributor to both top and bottom line growth. Pepsi derives about over 50% of their total revenue from snacks and foods at this point, and so it looks like Frito-Lay had another solid quarter. And then the beverages business is still very solid, particularly in emerging markets like Latin America and Asia, Middle East, and Africa.
Hey, Garrett, how do you interpret Pepsi not raising full-year guide, even though it beat for this quarter by 3 or 4 cents, depending on what consensus estimate you use? Are they just being conservative, or are they leaving some leeway for the back half?
We think they are. We think they are, and you could get a upward revision next quarter, but for now it looks like they're just being conservative with that.
So if you were running Pepsi right now to take it, a 5-year plan, what will you want to innovate and just as far as efficiencies go and the way that you do your business around the world? Do you want to make some inroads in new snacks for people like me that need a low carb, something that ends in toes, like either Cheetos, Fritos, Tostitos? What would you do? Would you work on innovating new drinks? Would you go into cannabis? What should Pepsi look like, or CBD? What should it look like in 5 years, Garrett?
So we think that's why the shares are up so much year to date. There's a lot of excitement. They have a new chairman and CEO who took the reins last fall from Indira Nooyi, who had been there 12 years as CEO. But he's pledged to make the company faster, stronger, and better. He's investing a lot in really shifting their portfolio towards healthier food and beverages, snacks, and there's an expectation that growth is going to be more robust under his leadership, and also that they're going to be more generous in returning cash to shareholders. One of the first things they did after he took the reins was they announced a plan to repurchase 50% more stock this year than they did last year. So I think you're looking at more generous cash returns to shareholders under his leadership.